Demand for rental apartments usually falls off this time of year, but just the opposite is happening now. Demand is spiking, even as mortgage rates continue to fall. Diana Olick tells us some of the reasons why.
In a close-in D.C. suburb, a massive apartment rental and condo complex is going up. And apparently it can't happen fast enough.
The metrics that we've seen this year have been off the charts.
Toby Bizzuto is CEO of the Bizzuto Group, which currently has over $1 billion worth of residential Class A construction in the works across the north and southeast.
I don't think luxury is overbuilt. I think in certain markets like Washington, D.C., New York, Boston, L.A., San Francisco, etc., there's a tremendous employment driver of very high income jobs. And those people have the propensity to rent and want to rent.
Apartment demand in the second quarter of this year spiked up 11% from a year ago. That, in turn, pushed rents up an average 3% nationally to $1,390 a month, according to RealPage, a real estate software and analytics company. Despite the increase, a record 82% of renters still say renting is more affordable than owning, according to a new survey from Freddie Mac. That is up dramatically from a year ago. Rental demand is currently highest in the nation's largest cities, with Dallas-Fort Worth, Chicago, Houston, New York, and D.C. leading. Apartment construction began booming back in 2014 and hasn't pulled back much, despite concern that lower mortgage rates would push more renters to buy. There is still a lot of new product in the pipeline, which does pose a risk, especially as builders' costs rise and a slowing economy makes it harder to raise rents.
The construction business continues to be challenged in terms of labor shortages and to some degree some pricing increases from tariffs.
All of which are passed on to the renters. For Nightly Business Report, I'm Diana Olick in Chevy Chase, Maryland.